Happy Black Friday to you, or is it? My name's Jason Graneman. I'm your lone slayer for the day. Let's get into it. In the spirit of Black Friday, the Dow, it's thunder showers. Dow's down, ended 900 points down. That's really about 1,000, especially because the aftermarket is reading at 1,100 points off its marker from Wednesday. Remember, we had yesterday off. Dow comes tumbling down. This is an example of fragile or fragile.
Fragile. It must be Italian.
Well, I think that says fragile, honey.
Oh, yeah.
This all happened this morning based on a few articles surrounding COVID and COVID restrictions. Now, this channel does not get into COVID. You should always do what's best for you. However, based on a few articles and some things around the world, remember I talked about global impact. Things globally can impact our markets here in the U.S. Well, that did happen. But since it was some articles which tend to lead to perhaps some policy changes about restrictions, especially abroad in other countries, the Dow reacted in a big way. Down 900 points, ended today. In fact, when we woke up, it was already down 800 points but in the pre-market. So the Dow didn't really move. What we woke up to is what we ended with, and it's still showing signs of weakness. If you look at it now, post-close, it's at 1,100 off its mark. So keep your eye on global events. The Dow and our equities market, based on just these types of news articles, shows you how fragile the market can be. And I would say at the levels we've been experiencing it in the Dow and the general equities market of 36,000, it's fragile. And I think we've just proven that to ourselves today. It's fragile. It's sun's out, guns out over in the treasuries market because the bonds are having a great day. We saw a huge rate improvement in the mortgage market, and, the 10 years now down to 1.48. Remember that baseline I was talking about a few days ago? I was watching that 1.57. Well, by roughly 10 a.m., we were breaking through that, and we were already seeing improved rates come out. So it's a direct reaction. Equities are retreated today, and the bond market got better. There was no delay in that. And they don't always have an immediate impact on each other. Today was definitely a very clear indicator of a direct impact between these two sectors of the market. Bonds are typically considered a quote-unquote safe haven, slower growth, more dependable but slower growth. And then the equities, of course, riskier, and we went completely risk off today in what we would call this, bullish market. Kind of feels like a radical teeter. Teeter? Seesaw. How about that? It feels like a radical seesaw in this market. I mean, where do we stand? It's difficult to read and be able to analyze the future, but watching what's going on definitely shows us there is some ties between the two today. Equities versus bonds, treasuries versus stock market. Keep your eye on the treasuries. Maybe we'll see some even better rates. I don't know. I can't predict this, and I really don't believe anyone can. But watch your global news, things that are going on in other countries that can impact what is transpiring in the equities market here in the U.S.
What did I do? What did I do?
Now, we shouldn't go without mentioning Bitcoin. It's down another 8% as I'm cutting this video. As we know, that's volatile as well, but 54,000 at this very moment. Ethereum's also down. I think it was about 8, 7, I don't know. But look at Ethereum. Those are those two major highly traded cryptos, both down at this moment, kind of following the trend of equities at this particular time. Haven't seen any comeback since you and I started talking about Bitcoin. It's definitely been trending down. So keep your eye on your investments. I'm not saying that the sky is falling. We may be in for a correction, who knows? But there's always a position here. What do I mean by that? Well, some folks may be on the wrong side of a correction when others are on the right side of a correction. As you see things move, figure out how you can be on the right side of it. I talk about discounts because, well, everything can be considered a discount when it's at the right price. Companies correct. If they come down, well, if you're in a position to strike, and when they're considered a discount, and only you can decide when they're a discount, but when they're considered a discount, then you might be in a position to actually take advantage of a correction and buy low, sell high. We all know that strategy. It's all about timing, though, and being able to keep your eye on the market, which is what this channel is all about, trying to help everybody focus and learn how to broaden your awareness so you can begin to anticipate more accurately. We can't win 100% of them. You can't call the market 100% of the time. I certainly cannot and never will claim to. But anticipation is something that we should all participate in order to help position ourselves so we're on the right side of any correction. Is this new? Not really. We saw this a year and a half ago when the pandemic initially rolled out. Now, the market's obviously reacting much quicker than it did last time. So it's tough to say what's going to transpire going into the Christmas holiday. However, if this is any indication, we may be in for a bit of a roller coaster ride. So keep your eye on volume, on the Dow, NASDAQ, these sectors. And of course, after I looked at Zoom a couple days, Zoom is kind of zooming back up as people are rushing in to take advantage of that, what might have been a discount when Zoom came down about 10% the other day. Earlier today, Zoom was up 6% based on that injection of volume that people were going back in to reinvest in Zoom. So I don't know if that's something, again, you've heard my perspective on Zoom. I don't know how many new users we can really get out of Zoom or new usage platforms, but the demand perhaps could be there. Dollar so far is stable. It's about 96 right now. That's where it's been for the last week or so. I keep an eye on the US dollar. As we discussed, it's been getting stronger. We'll see what happens with this, if it starts to fade or deteriorate. But if it doesn't, well, we could still have a strong dollar potentially going into this. I would say a strong dollar is still healthy for our economy here, regardless of what happens within the equities market. It's equities versus bonds, really just a shift on where to place your money. Remember, follow the money, and you'll see where the broad scope of interest is going. More money comes out of the equities market, typically slides over into the more stable long-term thought process of the bond market. Bond yields are smaller, but generally considered by those in investment to be a bit safer. Over the weekend, if you can put the Dow futures on your app or software that you track your market in, pull up Dow Futures. That will help show you the direction of the Dow in what's called pre-market. And you may not see very much between now and Sunday afternoon, being the markets are closed, but most of your pre-market heat up will happen within about 12 hours of the next day's opening. So, but you can monitor sort of the pre-market interest. Is it going to grow or shrink that gap between this morning? We shall see. Dow Futures, tip of the day for the weekend. Download or add Dow Futures to your app. I track everything on an app on my phone. So track the Dow Futures, and that will help give you some insight as to where the market's going to open come Monday morning. I'm going to keep riding the Radical Seesaw, and thank you for watching me ride this Radical Seesaw. So I'll be here with you next week as we keep our eye on what's happening in the marketplace. Now is a better time than any to stay involved, try to anticipate, and watch globally what's going on in the rest of the world so we can all become better anticipators. Thank you for watching. My name's Jason Granneman. I've been your lone slayer for the day. Remember, it's not work, it's a lifestyle. Cheers.
I'm still not out.